Hello, this is Brian Lysing with Financial Brokerage, and today I'd like to speak to you a little bit about a business life insurance idea that you've probably never heard of before. It is the self-owned buy-sell life insurance agreement. Now, how does that work? Well, to describe that, it's probably best that we go over a traditional cross-purchase buy-sell arrangement and show you how that works. Typically in those situations, you're going to have owner A will own and pay for a policy on owner B's life, and owner B will do the same thing. Now, what's the matter with that? Well, there's a few potential pitfalls. One, somebody else owns a policy on your life. So if that other owner passes away, or if you decide to leave the business, guess what? They still own that policy on your life. That's something that you might not be comfortable with or might not want to think about. Two, these are usually term insurance policies. So when the term gets to the end of the level term period and goes away, you usually have nothing left to show for it. And in most cases, since someone else owns that policy, it really can't be used for other purposes. You don't have any control over that. So let's contrast this with a self-owned buy-sell policy, and I'll explain a little bit how that works. In this situation, owner A and owner B own a policy on their own lives, and they are going to endorse a portion of that death benefit over to the other owner in return for what we'll call a rental fee. Now, there's a chart we can use to determine what that is, but it's not very much at all. Now, what are the advantages of the self-owned buy-sell arrangement? Well, because you own the policy on yourself, it makes a lot of sense now to use a permanent plan rather than term, because you now have access to all the cash values inside that policy that you can use for any purpose. It makes sense to have living benefits on this policy, whether it's a chronic illness rider or a long-term care rider, maybe a critical illness rider. You can tap into all that even while that endorsement is still in play. Now, you're not limited to just the amount of coverage needed to fund the buy-sell agreement. You can have additional coverage on yourself on that same policy, and that can be used for personal purposes. In fact, when you exit the business, now the whole death benefit reverts back to you, and that can be used, again, for your own personal reasons. So there's a lot of reasons that you want to own your own policy. From the business perspective, this gives the business a lot of flexibility. This works with any number of owners within the business. It makes sense if you anticipate owners coming and going, people leaving the business and inviting in additional partners down the road. We don't have to worry about a loss in the step up in basis like you would with a corporate owned policy as well. So several advantages to the self-owned buy-sell arrangement. Two tremendous business opportunities, sales opportunities for you as a producer. One, I guarantee you almost no business owners have heard of this arrangement. You can be the first one in the door to bring this to their attention. And two, this gives you a great reason to get back in front of your existing buy-sell life insurance clients. It gives you a great excuse to go in and review their current plan and tell them about something new that you weren't aware of the first go around. And they might have a term insurance policy in place. You can now talk to them about a permanent plan and all the advantages that I just mentioned. So give us a call here. We can walk you through and look at each individual situation and see if the self-owned buy-sell insurance policies would be a good fit for your business owner clients.